Let's bring in Anthony DiClemente, Evercore Internet Analyst, and Bill Smead, CEO at Smead Capital Management on this Monday, guys. Good to see you both. Anthony, we've obviously talked to death what's happened to some of these FANG names over a couple of months. Are they at attractive levels for you? And if so, which ones?
Yeah, absolutely. I think that what we've seen in October and November has been a big unwind in hedge fund positioning in these names. And so hedge funds have had to take down their long exposure, their levered long exposure. And what that is that's a technical factor that has been impacting these stocks. And as a result, you've got companies that, as a tech investor, you could own for a long time, many years, that are on sale right now. And so for us, if this is going back towards a risk-on environment as we head to 2019, Amazon would be one that we would go back to. John was talking earlier about some of the early tea leaves on Thanksgiving and Black Friday. The results have been substantially above expectations. And so that's a good sign. We think the fourth quarter revenue guidance for Amazon should end up being conservative. We also think Alphabet is a compelling value and perhaps more defensive if you think that this hedge fund unwind continues into year end. But the bottom line here, Carl, is that macro fears like the Fed, like tariffs, have been driving the market, and that's been driving down the FANG names as a result of this market unwind. And we think that those are largely, bigger picture external factors, and the company fundamentals for a name like, let's say, Amazon or Alphabet are intact.
And at the same time, Bill, it's interesting if you look at market caps. All of a sudden, Microsoft is bigger than Amazon and Google and nipping at Apple's heels about $15 billion away. It's an interesting kind of rebalancing effect even within tech. What do you make of that and the likelihood that names like Microsoft, maybe you'd count Oracle and Cisco among them, kind of older tech heavyweights that are having new life, that they could perform decently well into the next quarter?
John, I'm so glad you brought up Microsoft and Cisco, because our other guest could very well be right, but there were people saying exactly what he said about Microsoft, Cisco, and Intel 3 to 6 months into the decline in 2000 through 2002. So what you have to realize is we reached a 4 standard deviation event 2 months ago where growth had outperformed value by 50% over the prior 7 or 8 years. The same 50% it had outperformed from the middle of '96 through the early 2000 point. The problem is when the hedge fund guys bail out on their levered trade, that's fine and dandy. The problem is, where does a stock bottom that starts out at 120 times earnings? In the case of Microsoft, it was a 65% peak to trough decline from 2000 to 2003. Cisco, 90%. Sun Microsystems, Lucent, and the others are nowhere to be found. They're in the rubble pile somewhere. So the question isn't who's going to survive and prosper, because Microsoft and Cisco and Intel did survive and prosper, but they went 15 years in Microsoft's case, or 18 years plus in Cisco and Intel's case without making a new high. That's the trap people are in right now with the FANG stocks.
Bill, if this is indeed a trap, if these names, these FANG names are indeed going to drop even more from here, can the market rally more broadly without them?
We don't have the answer to that. That's a great question. It would be wonderful to know that. But I will say this, that per where interest rates are right now, there are spectacular opportunities in things that have been left for dead under the assumption that the only thing that matters is condo prices in New York, or the only thing that matters is condo prices in San Francisco. The other 85% of the United States economy is doing great without them, and it wouldn't be any tragedy to have tech in Palo Alto and Seattle go in the dumper for 3 or 4 years and the rest of the company to flourish, because everywhere I go, we're seeing families formed and houses are going to get bought. And that's the most interesting trade right now.